Hello, everyone. Welcome back once again. Today we're going to talk about shadow demand. Shadow demand will it break the 2024 housing market? That's the headline.
Okay.
Yeah, we can talk about a lot of people does not know. It's very hard to track housing demand. Right? There's no data. That's not as much data as the data to track housing supply inventory.
Mhm.
Well, yeah, before we dive in deeper, my name's Seewing Yee, the University Network, and my co-host is Julie. How are you, Julie?
Fine, thank you. Good morning, Seewing.
Yeah, good morning. Thank you for coming on board again to take time out of your day. You are putting once again, in case you guys out there are watching us for the first time, Julie is one of our top real estate member investor within our investing community, and she have a late start with respect to her real estate investing journey, but she ramped up very rather quickly. Better late than never. She realized,
Absolutely.
so yeah, Julie realized several years ago she's getting started late in life in terms of investing real estate, but she took it to the next level several years ago, and she bought a total of 6 rental properties under her own name and under the name of IRA. So she scaled her portfolio, buying out of state, buying long distance through our strategy. But we're not going to talk about that. Suffice to say, Julie have done very well. She have done a very good job of catching up and creating wealth through real estate by accelerating her real estate portfolio acquisition. She bought multiple properties, as I said. So Julie and her husband Mark, anyway, great client. You're putting yourself in the shoes of any real estate investor out there, just analyzing the data, analyzing the trends around the housing market.
Mhm.
So today we can talk about the one aspect of the housing market. All right. So without
Okay.
further ado, Julie, and Julie gonna also gonna share her opinion as we proceed with this module. First and foremost, we are going to you can see everything up on here, right, Julie? You can see
Mm,
that.
yes.
Yeah,
Mhm.
today we can talk about the article by Redfin. Redfin is a very popular website
Right.
that give people the housing market update on
Mhm.
a consistent weekly basis. Let's talk about the headline here. The headline in that this was published by Redfin
Okay.
last week, January the 12th,
Mhm.
and 24. And the headline is most homeowners with mortgages have a rate below today's average mortgage rate, prompting many to stay put. Is a quote unquote is a lock in effect. That's what's happening. Let me highlight what's going on with the sellers market. Nearly 9 10 US mortgage holders have a rate below 6%. Furthermore, 40% of all the homeowners does not even have a mortgage. They own their a house free and clear. So this is mind-boggling. And U.S. homeowners have more home equity than ever before in history. Ever. Okay, this is a historic all-time record. So let's go over this chart. Well, I know how to see, but the green chart reflects that around 25% of the mortgage holders have a mortgage rate of, as you can see over here, below
Sorry.
3%. So,
Mhm.
Julie, you and I, back in 2 years ago, 2021, it was a historical year with
Right.
respect to real estate, and you're getting free money essentially when you get
Right.
mortgage.
Exactly.
Historical mortgage rate of 3% or even below. So, currently, one quarter of all the mortgage holders have a mortgage rate
Mhm.
25% under the
Right.
red, then under the green color graph, which is right here, approximately 50% of homeowners have mortgage rate between 3 and 4%. And then under the light green, we're talking around 75% of the mortgage holders have a mortgage rate of around 4 to 5%. And
Okay.
then of course, under the light orange color code right
Right.
here, we're talking like 80% of the mortgage holder have a 30-year fixed rate mortgage of 5 to 6%. And finally, 90% of homeowners have a mortgage rate of below 6%. So therefore,
Above
yeah,
6%. Uh-huh.
yeah. So therefore, 10% of the current mortgage holder have a mortgage rate of around 6%. And those 10% of mortgage holders I would guess they have purchased their home recently within the past 12 months. And the mortgage rate was between 6 to 8%. Julie, can you briefly share with you from what you just saw? Share what are your thoughts so far based on my graphic?
I think it shows a trend. Like if I wish I had gotten into the market a little sooner, we do have a couple of our mortgages are in the mid fours or fives, and then a couple are on the high side, like that top tier. But I think the important thing is to take advantage of it regardless of where you are. Because if the longer you wait, you can see the longer people have waited. If they gotten in 3 years ago, they would have had it much lower. Now they're waiting, and now it's higher. And I think most people are waiting for it to go back down. And really, it's really just about, it's not trying to time the market. It's just really time in the market in the long run. Because really, in the long run, these are not going to make significant, if it's 6.5 versus 6.75, it's not going to make a significant difference.
Julie, I can also say to your point that the people that have locked, in fact, locked in the historical low mortgage, their mortgage is essentially a
Oh, absolutely.
asset. The homeowners that own these mortgages, they're not going to get rid of it. Yeah, historically, when historically speaking, when people talk about debt, any kind of debt, whether it's consumer debt or mortgage debt, is
Right.
considered a liability, right?
Yes. Yes.
Normally. But this type's different. When you talk about mortgage debt, especially the homeowners that have a low historical 30-year fixed rate mortgage debt
Mhm.
that they're holding under their house, that is their asset. They're not going to get rid of all their asset where the mortgage payment stays the same at low
Right.
rate for
Right.
and move up to sell their home and move up to buy a more expensive home at 7% mortgage rate. Essentially, they have double or even triple their mortgage payment. So
Right.
the math does not make sense. So Julie, people that refinance or purchase a home 2 years ago or prior, they have this locked in effect.
Absolutely.
They have 28 more years to hold on to the house. They're not selling, right?
Right.
If
Right.
they're not selling, the lock-in effect, the supply, how are you going to get the supply of inventory for balanced market?
And that's a very good point. They're not going to sell. They're not going to move, because move to what? Leave their 3% mortgage to move to something that's at 6.5 or 7. That doesn't make sense.
Yeah, yeah, exactly. So therefore, I believe because with the pent-up demand, with the mortgage rate or projected to come down this year, 2024 and beyond, we can see pent-up demand from those motivated buyers. They go to the market and there'll be a potential with the mortgage rate come down. But right now it's like a little bit like 6.7% of the speed, maybe. If the mortgage rate come down a little bit lower this year and beyond, like to 6%, even to 5.99%,
Right.
we can have a feeding frenzy and the supply will continue to be low because of the locking effect. And some sellers will sell because of light situations, but most still they're not going to sell. So therefore, creating a lot of pressure.
That's it.
Economics 101, economics 101, people should have studied that at sixth grade or seventh grade, in junior high school, maybe in the high school. Economics 101 means if demand is greater than supply, put upward pressure on home prices. And
Yes, absolutely.
if our viewers learn nothing else from this video presentation, because the pent-up demand clearly is higher than the
Yes.
historic low supply of inventory on homes,
Right.
then home prices will go up because you have more than one potential buyer bidding for a one house, right? So,
Yes.
uh,
Yes. Definitely.
you and I talked about it on the previous recent videos
Yes.
where we give an example of a house in the area where this home was listed at 997,000
Right.
a month ago.
Yeah.
And finally, it sold for 1.2 million,
Yes. Yes.
$300,000 over asking. That was in December 2023.
Right.
There were 30 offers. Out of those 30 offers, like some of them were all cash offers,
I believe that. Yeah, I believe that.
offering 20% above list price. This is crazy,
It is
right?
crazy. It's crazy. Yeah.
That,
Yeah, it makes it very difficult. I have a lot of several friends that are realtors, and they're all saying the same thing. It doesn't matter if it's $100,000 property or $1.5 million. Everybody's getting multiple offers.
yeah, and the spring buying season, spring means March, April, May, whatever. The spring buying season,
Yes.
every year it ramps up. Every year activity
Yes.
start to happen. If the mortgage rate stays at mid sixes or low 6%,
Mhm.
we have feeding frenzies. The smart buyers out there, whether you're owner occupier or investor, you better pull the trigger right now before the competition heat up.
Right.
When the competition heat up later this year, you're gonna overbid for the pricing.
Right. Mhm.
All the limited inventory will be gone in a heartbeat. So you can
Right.
pay more for your house than you could be paying right now. So
This is very true.
anyway, let's go over the Griffin article once again. So yeah, although most people are locked into the homes, there are always going to be
Mhm.
homeowners who are selling right now
Yes.
because of things like divorces, new jobs, or death in a family. Those things happen.
Yes.
Another paragraph I'm going to show here, one of the quote by some of the Refin realtor agent who says, it is worth noting that some homeowners, the fact that home prices soared during the pandemic means they have enough equity to justify
Mhm.
selling and taking on a higher rate,
Mhm.
especially if they're downsizing
Right.
somewhere more affordable. Yeah.
Mhm.
So, and this then he says the locking effect continues to fuel America's housing shortage. And yeah, listings have started to pick up recently. Typically happen during the spring of every
Mhm.
year, but not enough to unlock more supply. Where supply comes from? You tell me. In fact, Jordan, you tell me where the supply can come from. The sellers are not selling. The resale homes are pretty much frozen. How are you going to unlock the supply of inventory home? You have any kind of thoughts on that?
I really think that the only thing you can do or the government can do is just to lower the interest rates back down to where they were. I don't know that they're gonna do that, though. I don't know that they're gonna do that. So I think if your clients or your audience is looking to invest, they're gonna have to get connected to somebody that has that experience, like get a mentor and just can really guide them the way you were able to guide us to be able to get the deals that are out there that are available to investors. Because, yeah, if you try to do it on the open market or the MLS, you'll be shut out every time, unless you said, like, so many people are coming in with cash to buy properties. So there's a lot of competition out there.
Or absolutely pull the trigger now before the competition heats up. Because right now, as we talk about it on the previous videos, right now we're getting some lot of great deals. We're getting some discounts. We get lower prices. We can negotiate with the builder for our investors. We're able to get some builders mortgage rate buy down. All these
Mhm.
great incentives. This is mind boggling how great it is right now, right?
Yeah, it is.
Okay, let's go. Let's finish up on this article by Reston. Another quote by one of the Reston realtor agents. It says, rich or not going down back to 3%. That's for sure. We don't want
Right.
mortgage rate to come down back to 3%. It'll be chaos, right?
Yeah, you're absolutely right. You're
I,
absolutely right.
I don't even want that. I'm willing to settle. I'm willing to settle for 5.5% mortgage rate to 6%. So we
Mhm.
can potentially create a balanced housing
Right.
market, right? Yeah.
Yes.
We'll see. Time will tell. So this sentence right here, rates are not going back to 3% anytime soon, which makes it easier to pull the trigger on selling
Right.
some sellers.
Mhm.
Very
Mhm.
few. But a lot of sellers are worried about finding the next house because even though listings are rising, there
Right.
is still a tremendous historic housing
Mhm.
shortage.
Mhm.
And that's part of the reason so many sellers remain on the side.
Right.
So
Right.
let's recap this article once again, something you and I know about. So people need to validate this is what's happening.
Mhm.
Like we discussed, almost a quarter of all the mortgage holders have mortgage rate below 3%.
Right.
Almost 60% have a mortgage rate or fixed rate below 4%. Almost 80% of mortgage holders currently have mortgage rate below 5%. And then almost 90% of current mortgage holders have mortgage rate below 6%. So let me see what else. A mortgage holder in the 3 to 4% range is more likely to feel handcuffed
Right.
in their home than someone in a 5 to 6%
That's
range.
a good point.
Yeah. So so the headline of this video is shadow demand potentially going to break the housing market for 2024 and beyond.
Mhm.
Let me tell you what I mean by that, Jude. Okay. Shadow demand. Okay. What does that mean really? Supply, we have data, right? Lack of supply, we have data come from not only Redfin, come from Zillow,
Right.
come from Realtor.com, and many credible sources that hear data in terms to justify the numerical speaking, what are the supply, lack of supply of inventory. So,
Right.
but we cannot track, for the most part, the demand side. How can you numerically verify the demand out there? Let me tell you why. In my opinion, why it's very hard to track the demand and the demand. A lot of people sitting on the sidelines. Part of the demand that will come back to the market from the sidelines, if you will, especially when mortgage rates slowly will creep down for the next few
Right.
years, is that a lot of 1/4 to 1/3 of the potential buyers out there are potentially cash buyers, right?
That makes sense.
Yes, you have a lot of people that have cash out there. You don't know who they are. Are they primary home buyers? Some of them are. Are they
Right.
investors? Yes, many of them are investors like you and I, right? They have a bunch of money that they save up from other sources. They don't need a mortgage to buy. They buy all cash and they can outbid everyone.
Absolutely.
And also foreign buyers. You cannot track. We don't know the demand come from.
That's a very good
Look,
point.
foreigners entering the U.S. rental market for years. And you know why? Because the country where they live in are very high risk in terms of housing because of political risk, economic risk
Right. Good
in their
point.
own countries. So they put their own money to come to a safe haven
Right.
US real estate market. So they can
Interesting.
dump their all cash purchases to buy very robust U.S. residential homes housing.
Right. Right.
So
Yes.
at the end of the
A
day,
lot
a
of competition.
lot of competition coming up and people sitting on the sidelines, they're tired of sitting on the sidelines. Okay.
Mhm.
With the limited amount of inventory, you're going to have more than sufficient buyers out there. People who have the money, people who are upscale, affluent buyers, primary homeowners, investors, foreign buyers. Oh, one more thing, one more group that a lot of people don't know about: Wall Street and the hedge funds, the the imitation homes of the world, the Black Rock, the Blackstone of the world. They are
Right.
Wall Street hedge fund. They're going to come into a good market in the U.S. and they could buy in bulk. They can buy 3 or 4 thousand single family homes from those hot
Wow.
built markets such as
Right.
and Las Vegas and Charlotte, North Carolina, or in Florida, in Texas. They are part of the shadow demand of potential buyers as we discussed.
I see.
So my takeaway as we conclude this presentation that you cannot track shadow demand. They could potentially break the housing market moving forward. And the supply, where the supply going to come from? The builders can barely keep up. The new construction builders all over the country, they can barely keep up with the construction of homes. They'll try to ramp up, but they're not the meet order demands, and sellers will have a locked in for the next 28 years. Most people refinanced 2 years ago. They locked in with a low mortgage rate.
Right.
Most of them are not going to sell. So we
Good
can have a
point.
seller's market. We can have a seller's market for years to come. Bunch of
Makes
homes. Some sources said we know how many homes we're lacking between 3 million to 8 million homes under
my goodness.
supply.
Oh, wow. That's amazing. That's unbelievable.
Yeah. So the takeaway. Okay, what is your takeaway? We're talking the economics 101. Demand could apply for a long time to come. So therefore, what's the motivation for you and I as an investor? Given the data, given the shadow demand can break the housing market, that can put upward pressure on home prices for a long while to come. So
Right.
what's your final takeaway from this, Julie?
I just think that, again, you just have to decide what your goal is and jump in now. Because like you said, the demand ramps up as we get closer to the middle of the year. Kids are getting out of school. That's when a lot of parents make their moves. And I think you just instead of trying to time the market, watch where the interest rates are going, just get in. The reverse could happen. It could go up some more. They're coming down a little bit, but if you're waiting for it to get down to that 3 or 4%, that's a mistake. I think that's a mistake. I think that you got to take advantage of things where they are now, given whatever your particular goals are for investing, and just move on it.
Yeah, or you can always refinance later, right?
That's true.
You date the interest rate, but you marry the house.
There you go. There you go.
Mm,
Perfect.
okay.
Perfect. Perfect. This is great. Good information. Really good information today.
Yep. Thank you so much. Anyway, I think we conclude this presentation. Again, if for those YouTubers out there are watching our videos and you receive any kind of value whatsoever from this video, please like and subscribe to my YouTube channel. And finally, also put your email down below on the link below to subscribe to my website so you become a new real estate investor, free real estate investor within our investing community with the Yee Real Estate Network. So every week on your email, you will receive some great free real estate information about how to become a successful real estate investor. Am I right, Judy?
Absolutely. You can do it. You can do it. Anybody can do it. If we can do it, anybody can do it.
Thank you again, Judy, for co-presenting. This is Seewing Yee.
You do.
Have a nice day. I'll see you on the next video. Bye-bye.
Bye-bye.